Once more, I want to welcome you all to tonight's weekly review and outlook session. And so we'll just go straight to the chart. We'll start by looking at GBPUSD. If there's any pair you want us to analyze, please drop it in the comment section. If there's any pair you want us to look at together, drop it in the comment section. So I would be starting with GBPUSD. Last week, I told you guys my bias for GBPUSD was what? I was looking for buy opportunity on GU. That was my bias for last week. But if you look at the charts, GU was bearish all through last week. It was bearish all through last week. I took just one trade on GU and my SL was hit last week on GU. Okay, so let's do a review on GU. So as you know, we start with the weekly time frame, and I believe if you've been following me for some time, you know how I analyze the market, my approach to the market, the tools I use for analysis. I start by looking at the candlestick pattern that forms on the higher time frame. I start from the weekly down to daily and 4 hour. Sometimes I would use the weekly as my higher time frame, daily as my higher time frame, and 4 hour as my higher time frame. The higher time frame where the pattern forms, the time frame where the pattern forms will determine the higher time frame. The time frame I would use as my higher time frame, the medium and the lower time frame. I hope you're getting me. The time frame where the pattern forms. So if on the weekly time frame, I'm able to identify a bullish reversal pattern on the weekly time frame, it means for that weekly time frame will be my higher time frame. Daily will be my medium time frame. 4 hour, 1 hour will be my lower time frame. And most times the 15 minutes time frame is my execution time frame. If the candlestick pattern forms on the daily time frame, the daily will be used as my higher time frame, 4 hour as my medium time frame, 1 hour as my lower time frame, and 15 minutes is execution time frame. And if the candlestick pattern forms on a 4 hour time frame, 4 hour will be my higher time frame, 1 hour will be my medium time frame, and 15 minutes will be my execution time frame. I hope you're getting me. So we'll start with the weekly time frame. Why do we start with the weekly time frame? We need to know the trend for the week. We need to know the trend for the week. Okay. And whatever trade we're going to execute on the lower time frame must be in agreement with the higher time frame trend. Okay. So let's start with the weekly. Like I said, last week was it was bearish. For those who sold GBP USD last week, you would have made some good profits, at least 100 pips on GBP USD. I took a loss on GBP USD last week, 50 pip loss. Okay. So why did I consider buying GBP last week? Because price tested this resistance turn support. You can see, and look at how last week candle closed. It closed as a spinning bottom, a bearish spinning bottom. Now, one would have waited for the past week candle to close bullish because this is a bearish spinning bottom. One would have waited for this past week candle to close bullish, confirm that there are buyers in the market. But what I did after the close of the weekly candle, I went down to daily time frame, and I think I was able to identify a bullish reversal pattern on a daily or 4 hour time frame. Let's confirm that. Okay, so let's see what we had on a daily. So you can see what we had on a daily last week. price tested this resistance, on support, bullish candlestick formed. Now, if you go to 4 hour, you would see the bullish reversal pattern. I think an armor formed on 4 hour time frame. You can see this is what we had on 4 hour last week. We had an engulfing pattern. You can see. So that was the reason I went bullish on GBP USD last week, but it sold. Okay. So what's my take for this coming week? What am I looking at this coming week? So we'll go back to the weekly. So last week candle closed bearish, which indicates that we have more supply than demand. Okay. It indicates that traders are still willing to sell GBP USD. It could also be that they want to fill this fair value gap. Can you see this fair value gap here? It could also be that they want to fill this fair value gap before going bullish. Are you with me? So this week, I am still bullish. My bias for GU is still bullish. Are you getting me? My bias for GU is still bullish. Now, after the close of last week candle, let's go down to daily and see the pattern we had on daily. If we are able to identify a bullish reversal pattern on a daily time frame, then we should consider buying GU this week. Okay, so this was on Friday candle. This was Thursday, right? Yeah, this was Thursday. So this closed as, this is a bullish candle. We had this is a double bottom or equal low here. Okay, which is an area of liquidity at the moment. This equal low is an area of liquidity. So there's a high probability they would want to clear the liquidity residing at this previous lows before going bullish. Are you with me? It is likely they would clear the liquidity residing at this previous low before going bullish on, or before going bullish next week. So that's my expectation on GU next week. I want to see them clear the liquidity residing at this previous low. After liquidity gets cleared, I wait for a bullish reversal pattern to form on a daily time frame or 4 hour time frame before going bullish on GBPUSD. Okay, so let's go down to 4 hour. After the formation of this pattern on the daily time frame, that was on Thursday, what pattern do we have on 4 hour time frame? Let's see. So you can see the pattern we had on 4 hour. We had a spinning bottom. Can you see that? And this candle engulfed the high of this candle and also the high of this armor. You can see we had an armor. Now this is a bearish armor. Remember, armor indicates changing trend from bearish to bullish. Now this is an armor, but a bearish armor. So after the formation of this bearish armor, we expected to wait for the next candle to close bullish before going bullish on GBPUSD. And this is the first candle that closed bullish after the armor. So this would have been the best entry for GBPUSD buy. Okay, this would have been the best entry for GBPUSD buy last week. So one would have bought after the formation of this candle. Now, what happened here? After this candle engulfed the high of these bearish candles, what happened? It created a fair value gap. It created a fair value gap. Can you see the gap? That is the gap in between the high of this candle and the low of this third candle. That is the fair value gap. You can see. And when a fair value gap is created, price is expected to come back and fill that fair value gap before going bullish. Remember, I told you when we're looking at the daily time frame that it is likely they will come and clear the liquidity residing at this relative equal low before going bullish. But because of this fair value gap that was created, they might not push price to these lows. Are you with me? They might not push price to this low. So if I would be buying GBPUSD, after this gap gets filled, this fair value gap, after it gets filled, if a bullish reversal pattern forms after this gap gets filled, I would go bullish. But if price breaks this fair value gap, then there's a high probability they will come for these lows. So it is the candlestick pattern that forms after these gaps gets filled that will determine if I would go bullish on GU. But if the body of the candle closes below this fair value gap, then there's a high probability they will come for the lows. The stop losses residing at these lows. There's a high probability. I hope you're getting me. So it is the candlestick pattern that forms after this fair value gap gets filled that will determine if I would go bullish, or the candlestick pattern that will form after this fair value, after the liquidity residing at these lows is cleared. I hope you're getting me. So my bias for GU this week is bullish. I hope that is clear. Any question on GU before we move to the next pair? Let me know in the comment section. If you have any question on GU before we move to the next pair, just drop it in the comment section. Is that clear? Is GU clear? Are you with me? Are you here? Are you here? Is GU clear? You are not responding. Is GU clear? Okay, let's move to the next pair. Euro USD. Let's move to the next pair. Let's look at Euro Aussie.
Yeah. Better.
So we'll start with the weekly time frame. Okay, so last week closed strongly bullish. It's closed strongly bullish. Okay, so strongly bullish. So strongly bullish. Okay, so let's go down to, this is an indication that we still have more buyers than sellers in the market. Okay, it's an indication that we still have more buyers than sellers. Okay, now it could also be that the buy we saw in the market last week would be to clear the liquidity residing at these previous highs. Okay, it could be to clear the liquidity residing at these previous highs. Also on the weekly time frame, we have a fair value gap here that is yet to be filled. So this pullback could be to fill this fair value gap. That could be the reason for the pullback. Are you with me? To clear the liquidity residing at these previous highs, and also clear the liquidity, also fill this fair value gap that was created on on the weekly time frame. So let's go down to daily. After the formation of this bullish candle, what pattern do we have on a daily? Okay, so this is what we have on a daily. Liquidity residing at these previous highs has been cleared, and this is the fair value gap that was created on the weekly time frame. So it is likely they might want to push price up to fill this fair value gap. Okay, now after liquidity has been cleared, the next thing to look out for is the candlestick pattern that forms after liquidity has been cleared. So liquidity has been cleared here. If the next candle closes bearish, that is, the pattern is a bearish reversal pattern, one can risk selling. Are you getting me? One can risk selling if the next candle closes bearish as a bearish reversal pattern, maybe a shooting star or an engulfing pattern. One can go bearish. And since you know there's a fair value gap that is likely going to be filled, get filled. Since there's a fair value gap that needs to be filled, okay, if you are taking a sell trade after the formation of a bearish reversal pattern, your stop loss must be above this fair value gap. Are you getting me? So if your stop loss will be above that fair value gap, let's assume you decide to sell from this point, your stop loss will be above this fair value gap. Like I told you, you always know the risk on the trade before you take the trade and ensure that you are comfortable with the risk. So if you decide to take the trade from this point, your stop loss would be about, let's say, 100 pips. And to me, that risk is too high. Okay, that risk is too high. So you either patiently wait for price to come and fill this fair value gap before you sell, or if you insist on taking the trade after a bearish reversal pattern forms, if you decide to sell from this point, you would have to reduce your lot size on the trade, your lot size. You insist taking the trade from this point because the risk here is high. So for example, I ensure that the risk I'm taking on any trade does not exceed 50 pips. So let's say the lot size I apply on every trade that is 50 pips, that the market risk is 50 pips. Let's say I apply 0.1 lot size. Since the market risk has doubled, it is now 100. It means on that trade, I shouldn't use more than 0.05 lot size. Yes, 0.05 times 100, that will be 50 pips. But if it is 50 pip risk, I can apply 0.1 lot size. Are you getting? So if you insist on taking the trade from this point and your risk is 100, reduce your lot size. If the lot size you're using is 0.06 on a 50 pip risk, now that the risk is 100, you have to half the lot size. So the lot size you would use is 0.03. I hope that is clear. So my expectation on EA this week is bearish. I'm looking for sell setup on Euro Australian dollar. Last week my bias was sell on Euro Australian dollar, but it's bought. It's bought. Okay, so there was no setup for sell on Euro Aussie last week. So I didn't take any trade on Euro Aussie. So I'm still expecting bearish move on Euro Aussie this week. So I need to wait for confirmation. Okay. Either price fills this fair value gap before going bearish, or a bearish reversal pattern forms after this liquidity has been cleared. And as we can see here, a bearish reversal pattern has not formed. So there is no confirmation to sell yet. Okay. With what we have here, buyers are still in control. With the price action we have on daily and the weekly time frame, the bulls are still in control. So we cannot jump in and start selling. We need more confirmation. Okay. So let's see what we had on 4 hour on Friday. Let's see. So you can see what we had on 4 hour. Liquidity residing at this previous high was cleared. They know a lot of retail traders would have executed sell after the formation of this candlestick pattern. This is a spinning top. And where would they have their stop losses? Their stop losses would be at this previous high. Many would have entered sell from after the formation of this candle. Some would have waited for this candle to form before selling. And where would they have their stop losses? These highs. So last Friday, this candle was used to clear the liquidity residing at this previous high. So if the next candle on 4-hour engulfs this bullish candle, then one can consider going bearish on Euro Australian dollar. But let's see what we had on 1 hour. What do we have on 1 hour time frame? So you can see on 1 hour time frame, this is a bearish reversal pattern on 1 hour time frame. You can see. So if you consider the candlestick pattern on 4-hour and 1 hour time frame, one could risk selling Euro Aussie from the current market price, going by the candlestick formation on the 4-hour time frame and 1 hour time frame. Okay, but we still need to check 15 minutes to ensure that there's a shift in market structure. Remember, right? We don't just jump in because we've confirmed the pattern, the bearish reversal pattern on 4-hour and 1 hour time frame. We need to go down to 15 minutes and ensure that there's a shift in market structure on 15 minutes. So you can see on 15 minutes, there is no shift in market structure. Can you see that? There is no shift in market structure on 15 minutes time frame, so we cannot sell. The shift in market structure on 15 minutes time frame would occur after price breaks this low. This is the most recent higher low on the 15 minutes time frame. Can you see that? So this is where the shift in market structure would occur. Or should we wait for price to get to this low before we sell? Let's calculate the risk involved. Wait for shift in market structure to occur. Okay, the risk is not much. Let's assume the candle that will close below this low closes. Let's assume it closes at this low. We decide to sell. Our stop loss, that's about 75 pips. 75 pips. I know before price will break this most recent higher low, it will create a fair value gap. There's a high probability that it will create a fair value gap before it breaks this low. So what do? You should wait for price to fill that fair value gap that will be created before this most recent higher low is cleared. Okay, you can also go in if you are comfortable with the risk, something pip risk. You can go in with, you can execute the trade, but you ensure that your lot size is reduced. You ensure that the dollar amount you would lose on that trade does not exceed your daily maximum drawdown. I hope you're getting me. So you can decide to sell immediately price breaks this low, or wait for price to fill the fair value gap that will be created after this low or before this low is cleared. Are you getting me? So that's my take on Euro Aussie. I will be selling Euro Aussie this week, but I need to wait for this most recent higher low to be cleared before I would go bearish. Okay. I hope that is clear. Someone said we should look at GJ, right? GJ. Okay, we'll look at GJ in a few minutes. GJ. Let's quickly look at GJ. So the guys, last week my bias for GJ is still bullish. Still bullish. So let's start with the weekly. So last week candle closed strongly bullish, right? You can see it's closed strongly bullish. There is a fair value gap on the weekly time frame think they might want to fill this gap before going bearish. I shared this with you guys on several weeks ago, 2 or 3 weeks ago, that there's a high probability that GJ would want to fill this fair value gap before going bearish. So my bias for GJ is still bearish at the moment. Still bearish at the moment. So after the close of last week candle, let's see the candlestick pattern we had on 4 hour. Remember, this coming week is NFP week, right? Yeah, it's NFP week. So this is the pattern we had on Friday, Thursday, Wednesday, okay? This looks like a bearish reversal pattern on daily. So after the formation of this bearish reversal pattern on the daily time frame, we need to go down to 4 hour, 1 hour, 15 minutes and ensure there is a shift in market structure on 1 hour or 15 minutes time frame. So let's go down to 4 hour time frame. So on 4 hour, there is no shift in market structure on 4 hour time frame. Let's say 1 hour. No shift in market structure on 4 hour time frame. That tells us that GJ is still bullish. GJ is not set for sale. The structure is still bullish. There is no shift in market structure on 1 hour, 4 hour. Let's go down to 15 minutes. Let's see. So GJ is still bullish. No shift in market structure on 15 minutes too. You can see. No shift in market structure on 15 minutes. So GJ is still bullish. Still bullish. The shift in market structure on 15 minutes should occur here. This zero shift in market structure should occur on 15 minutes time frame. So GJ is still bullish at the moment. It is still bullish at the moment. If I want to sell GJ coming week, though the trend is still bullish, let's see. If I want to take a risk selling, you can see here. You can see a fair value gap was created here. If I want to risk selling, I want to see price pull back to this fair value gap. That is where I will consider selling. Okay. That is where I would consider selling. Price should pull back. This is about 60 to 70 pip retracement before going bearish. Okay, because if I decide to sell from this point, you can see the risk here. 114 pips. That's about 120 pips because I'm going to set my stop loss few pips above this high. There's an area of liquidity. They might come for it. So my stop loss would be a few pips above this level. So let's say the risk is 120. That risk is too high. But if price pulls back to this area, I decide to sell from this point. My stop loss will not exceed 60 or 65 pips. Can you see that? 60 or 65 pips. And if I'm selling from this area, my first TP will be this relative equal low. This equal lows. This will be my first TP. So I will be risking 65 pips for 100 and something pips, 150. That's close to 1 to 2 point something risk reward. You can see that. So that's my take on GJ. GJ is likely going to sell, but long term, it is still bullish. It is still bullish. The gap on the weekly time frame would be filled. There's a probably they want to fill that value gap. Okay, so that's my take on GJ. I would not advise going bullish on GJ at the current market price. Remember, I told you guys when you open the chart, the first thing you want to identify is where price is coming from, where price started going bullish or where it started going bearish. You need to first identify that. Then where is price at the moment? and where is price heading to. Those three things you should know. You should be able to identify those three things on the chart. Okay, so from this point, this is where GJ started going bullish, and it's currently at this price. Calculate the difference. I think it's above 800 pips from this low. It's above, you can see, it has done over 1,370 pips. So why would you want to buy at this price? You didn't buy from this price. You had an opportunity to buy after this little retracement. You would have bought from here. You didn't buy from here. There was a little retracement here too. You didn't buy from here. So you've missed three opportunities. You've missed three opportunities. So why would you want to buy from this point? FOMO. FOMO would be the only reason to buy from this, from the current market price. So if you are considering buying, you should wait for price to pull back. There should be a little retracement before you go bullish. Okay. I hope that is clear, Mr. Evans. If I'm to take any risk on GJ, maybe on Monday, Tuesday, I would go bearish. Then look for buy opportunity maybe by Wednesday, Thursday. That's my take on GJ. Okay, so let's look at gold. Look at one or two more instruments before we end today's session. So let's look at gold. Gold is still bullish. Gold is still very bullish. Every sell on gold is a retracement at the moment. Technically, it is bullish. Fundamentally, it is bullish. Remember, November 5th is US election. Okay, November 5th is US election. And because of that election, most investors would want to invest in gold. That's one of the reasons gold has been bullish for some time, because of the forthcoming election in the United States. That's the reason gold has been bullish. And I believe it will still be bullish. Okay, it will still be bullish. So my bias on gold at the moment is bullish. It's still very bullish. So you can see last week candle closed strongly bullish. Let's go down to daily. So on a daily also, still looks bullish. You can see still very bullish on a daily time frame. The structure is still very bullish. It's been forming series of higher high, higher low, higher high, higher low. It's still very bullish. Let's go down to 4 hour. Shift to market structure on 4 hour time frame. No shift to market structure. You can see that. Okay, there was no shift to market structure. You can see this was a trap. You can see what played out here. If the body of this candle had closed below this higher low, one would have considered going bearish. You can see. So what happened here? They pushed price here. A lot of retail traders would have jumped in to sell. There was no shift in market structure on 4 hour time frame. You can see. When they tested this higher low, what happened? A bullish reversal pattern formed on the 4 hour time frame. Can you see that? Can you see? Immediately they tested this higher low. Price pulled back. You can see the pattern that formed. The bullish reversal pattern formed. You can see. So this would have been a good entry for buy on gold. This would have been a good entry on buy. Now, after this pattern formed here, what happened? It created a fair value gap. See the fair value gap that was created here. Price pulled back to fill the fair value gap. You can see it's pulled back to fill the fair value gap. Many will see this as a breakout from fair value gap and start selling. What happened? Immediately after that, the next candle closed bullish. So why did price break this fair value gap on the daily, on 4 hour time frame? Maybe if you go down to 1 hour time frame or 15 minutes time frame, there's still a fair value gap. below the daily or 4-hour fair value gap. So you can see here, okay, we had this. Let's go to 15 minutes. I want to find out the reason for a breakout from the 4-hour fair value gap. Let's see. So you can see this is 15 minutes. See, a fair value gap was created here. You can see. Can you see this little tiny fair value gap that was created here? You can see. You can see the little fair value gap that was created here. Price came back, tested that area, and there was a strong rejection. Can you see that? Strong rejection from that level. You can see we had a resistance here, which became a support also. You can see this resistance, which became a support. You can see. And if you come back here also, we had a resistance, which became a support. So this is like a demand zone. Can you see that? This is a demand zone. Price came back, tested the demand zone, and there was a strong rejection from that zone. This has been another opportunity to buy gold. Okay, so my bias on gold is still bullish. So the current market price isn't the best price to buy. Okay, it's not the best price to buy gold. If you want to buy gold, wait for price to pull back. Wait for price to pull back. As you can see, a fair value gap has been created here. So if you want to risk buying gold, you should wait for price to at least